Today's interview is with Tyler Chesser. Awesome interview today for you guys. And he's a multifamily broker, but also a multifamily real estate investor. And he's big on mindset stuff and self-development. So we talk about all of that. So if you're interested in multifamily, if you're interested in how you become a commercial broker, and if you're interested in self-development, this is a video for you. So stick around and enjoy all of that. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Tyler Chesser. Hey, Tyler.
Barry, my man, I love the energy. This is awesome. How are you?
I'm fantastic, man. I'm doing really well, and I'm glad to have you on the call today. I'm really excited to jump into the conversation. Thank you so much for being here, man. I really appreciate it.
My pleasure, my friend. And anybody who's got energy like you, let's hang out all day. I'm in.
I got to bring something, right? I'm going to bring something. Energy is free, so I thought I'd bring that at least. That's so right. Before we jump into the fun conversation that we're going to have today, no doubt, can you sort of introduce yourself to everyone and let them know more about you and what you've been up to and what you're currently doing?
Absolutely. Yeah. Thank you. And I always love the opportunity to share a bit about myself, just because I know that at times, people can align with my story, my background, where I came from and that kind of stuff. So I always appreciate the opportunity to answer this question. And I'll just kind of give you the high level, from where I came from, where I went, where I'm going, where I am now, all that stuff. But I grew up kind of middle class, middle America. And, I was always taught, hey, go to school, get good grades, get a good job. And, you'll, climb the ladder, climb the corporate ladder. And to me, the ultimate success was being successful in corporate America. I mean, that's what the reference that I had. That's what I saw, in terms of the most successful people in my world were successful in corporate America. And so I ultimately got into the corporate world, and I was actually doing international marketing for a Fortune 500 firm as I got started as a professional. And I sort of look around and say, well, wait a minute, is this the life that I really wanted from that? And it's interesting because I never thought about that question until I broke into that moment in time. And this was several years into my corporate journey. And I'm looking around and I'm thinking, all right, I'm climbing this corporate ladder, but is this the right ladder that I should be climbing? And it took me a while to get to that question. I was thinking, well, wait a minute, maybe there's a different organization I should be a part of. Maybe I should, go apply over here. Maybe I should do this. And I started thinking, well, wait a minute, am I just going to get myself in the same position? And, so I ultimately learned that perhaps a different path for me was to become an entrepreneur. And it was interesting because I didn't know anybody who was entrepreneurs growing up. I mean, it just wasn't, my parents weren't, I didn't have people in my sphere of influence who did, but I started to network, I started to ask questions, and I started to get really curious about, well, what am I really good at? What are some of my passions? And I learned that I was naturally good at connecting with people and influencing other people and building relationships and building leverage and mutually benefiting each other through, collaboration. So I ultimately got into real estate as a salesperson. I started to sell residential real estate as my first step into the door. It's so interesting because I look back and I think about real estate. I didn't know anything about real estate other than the fact that single family homes was real estate. To me, everything around me, it was like I was a fish in water. I had no idea what was surrounding me. And I started to recognize, well, wait a minute, real estate is more than just single family homes. And so I evolved into a commercial real estate practitioner and was selling income producing real estate. And then, of course, I continued to go down the rabbit hole of all the beautiful things that you and I now love about real estate in terms of building wealth, in terms of building multiple streams of income, in terms of leveraging time, leveraging, expertise, and all these beautiful things that real estate gives you, and how it can be a vehicle towards creating any outcome that you want in your life. So I started investing in these properties because I tell you what, man, I looked at a commercial property, and to me, it just, nothing made sense until I started to recognize that it was all about income. It was all about cash flow. It was all about risk and reward and understanding how to leverage all these different systems to create that. And, so I started to invest in multifamily real estate because it's what I knew, it's what I understood, it's what I was highly active in from the brokerage side of things. So I started to actively invest and build my portfolio from that perspective. And, over time, I became really passionate about personal growth as well, because for me to be successful as an entrepreneur, shifting from a W-2 corporate employee to an entrepreneur, I had to reinvent myself. I had to manage my emotions. I had to learn how to negotiate with other people. I had to learn how to build a network, how to build deep and meaningful relationships. And so for me, the process was personal mastery. And I was investing in coaching. I was investing in seminars and conferences and books and everything. And so that's what I became so obsessed with is who's that next version of myself? And I continued to overcome, challenges and of course, setbacks that would bring me 3, 4 steps back. And then I'd climb just a little bit further forward and I'd learn a little bit more. And, I just became so passionate about, hey, you know what? I have so much more, available to me within. If I look within, if I work on myself, and then I can give that to other people as well. So real estate to me is a vehicle towards creating practical outcomes that I want in my life. But the beautiful thing about all of it is, hey, I can actually become the greatest version of myself as a process. So building businesses, being an entrepreneur has been the greatest self-discovery process of my life. And so, hey, I'm just getting started. I've been in the business now for 8 years, but I'm really passionate about, all that comes with that. So anyway, that's my very, very long-winded answer of who am I?
No, that's a cool story. And it's cool what you said there about the personal development and looking within and figuring out who you like. Because I've always heard that, and it really resonates with me, is if you want to be successful, you need to figure out who you need to be to reach that level of success, right? Who is that person? So whatever your level of success and whatever that looks like to you, you want to try and figure out who that person needs to be, right, to get there. What do you need to learn? What are the skills you need to learn? What personal development do you need to do? What habits do you need to pick up? What kind of daily routine maybe do you need to create for yourself? What kind of environment? What kind of a network, right? These are good questions to ask yourself to be that person. And it seems like you ask yourself a lot of these questions.
Yeah, that's right. I mean, I always, for me, like actually, what's really interesting about that? You're saying asking myself a lot of those questions. This morning, I was on a call with somebody and we were talking about, impacting more people and helping more people. And that's become something that I'm really passionate about is contributing to others and helping them overcome maybe their own doubts or their own limiting beliefs or those kind of things and exploding through that and seeing what's on the other side of fear. And it's so interesting. The guy asked me, he said, well, why are you qualified for this? And I said, well, you know what? That's really interesting that you asked that, and I appreciate that. And my first inclination was, why not me?
Right.
Why not me? And so I think that that's something that I would love for everybody who's listening right now is to maybe pause this and just ask themselves, why not me? Just maybe write that down because I think when you ask yourself powerful questions, you get powerful answers. And how inspiring is it to ask yourself something like that? Because I don't know about you, Barry, but there's been so many times in my life that people have doubted me. And there's nothing that inspires me more than overcoming not only my self doubt, but perhaps limiting thoughts from other people. So, what drives you and ask yourself, why not me? So, asking powerful questions, I think will give you powerful answers.
Man, I love that. Why not me? Because yeah, definitely there's people that doubt you, but I would also go something that's even stronger than people doubting me is me doubting myself. Because I don't think anyone can be harder on yourself than you sometimes. Oh, I know there's nobody harder on me than me. I know that for sure. And sometimes you've got to flip that switch and say, yeah, it's good to have self-reflection and self-accountability and understand where you're going, but to ask yourself that question, why not me, right? Because there's billionaires in real estate, there's people doing it every day. Even if you're just looking to do one flip a year or to invest passively in a deal, there's people doing it every single day. So if they could do it, why can't you, right? Why not me? Because someone's doing it, and why not let it be you? And I love that is such a powerful question, man, because it's something that you can answer your own self criticism with, for sure.
Well, here's the thing too, like everybody looks out there and they say, well, yeah, all these other people are successful, but I can't do that, or I don't know how to do that, or I don't have the resources. And what I'll say is it's never a matter of resources. It's always a matter of resourcefulness. So how creative are you going to get? How curious are you going to get in terms of how are you going to solve these problems? How are you going to overcome perhaps the lack of resources right now, right? Because when you start to ask yourself more powerful questions, you get more powerful answers. And so to me, that's really exciting. And when I started to ask myself questions like that instead of why can't I do this, it's why not? Why can't I? Why can't I do this? Right. And so it's a frame of inflection, right? So I think it's really powerful and it's exciting, but it's also endless, right? The journey never ends. And at any moment we can reinvent ourselves. And just because we had a setback doesn't mean that's not a setup for a comeback. As corny as that sounds,
No,
it's
yeah.
the truth, right? And it's all a matter of your perspective.
Yeah, for sure. The question thing is huge as well, right? If you ask yourself a basic question, you're going to get a basic answer or a basic result, right? But if you ask yourself better questions, right? Like, okay, like what am I trying to do with my life, right? Okay, that's a good question. But if you start asking yourself, you can ask better questions than that. What does my life look like? Who do I need to be, right? Back to that question. Who do I need to be to get the life that I enjoy? What does it exactly look like? What define it better? Who am I with? Who's in my life? Where am I in my life? What am I doing with my life, right? And these will give you better answers. And that's just a high level. You can, every day of your life, you can ask yourself better questions. And I found myself, the better the questions I ask myself, the better the results I have, and the
Yeah.
more evolution I have through myself. So I love that, man.
I
It's
agree. And there's no limits too. Like, if you really sit down and say, "Hey, what do I really, 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 really want?" And you start to just brainstorm. And if you really intend on making those things happen, it starts from a frame of reference, hey, anything is possible. And if you recognize that, then look, the world opens up with possibilities and, opportunities and things start coming your way. But if you stop yourself from recognizing that anything is possible, well, then it's never going to come to you. So I think that's really important.
yeah, phenomenal, man, phenomenal. So what, you said that, was there a moment that made you realize, hey, this corporate ladder might not be the way that my life is supposed to be? That's what I've been taught. That's what I've been hearing. That's what I've been seeing. Climb the corporate ladder means success, right? Was there a moment that made you realize, hey, wait a minute, this isn't quite what I thought it was. This might not be the success that I think it is. Was there a defining moment, or was it just a gradual thing, you think?
It was kind of like a gradual thing over a few years. I started to look around and think, well, wait a minute, am I fulfilled? So here's so interesting. I didn't know what the word fulfillment meant, right? I had no idea. I mean, I was just trying to look, I was trying to climb the ladder, and like what was defined to me as success, perhaps indirectly, was not really what success ultimately became. But I think I was really tolerating my life more than anything. I was fulfilled and I was learning in terms of a professional progression, and I liked what I was doing, but I was also in the midst of the political environment of the corporate life. And, if I wanted to get to the next level, I needed to brown nose a little bit, or, kiss up or whatever, or, leverage a relationship that, it's like, of course, I get that. That's sometimes the way of the world in some ways. But I looked around and said, all right, well, where do I want to be in the next 10 years, the next 20 years? And I was recognizing that, well, wait a minute, if that's where I want to go, then is this really the right path? The other thing too is like it was like the end of the day came and it's like, man, I can't wait till this week is over. I'm just exhausted. This is tiring. I'm not loving this. I'm not loving this environment. And so I was thinking, well, what else is there? And so the tolerating thing, it had to fester within me for a few years before I took action, which is really interesting because now I've come to a point where it's like if there's something I don't like, I make decisive action. But it was an evolution process. So yeah.
Yeah, that's interesting. Like, because that's one thing for me is like you said, having to the brown nosing and to tolerate people that you don't like, right? That's one thing I really love. There's so many things I love about real estate, but one of the things I love is that you get to create the life that you want, right? So there's people that you don't like, invest in your real estate, don't involve them, don't have them around, don't do anything with them. There's a certain type of person that you don't enjoy, don't do business with them, right? There's enough business in the world. You don't have to just do these deals with people you don't like and things like that. You can create it. So not only can you create a life where you do whatever you want or the way you want it, but you can also have the people you want around you as well. And that's just so powerful. And what you say there as well, like, is living for the weekend and just like or waiting for that clock to turn to 5 or 5:30 or whenever you clock off, man, right? And you look at it and it's almost going backwards, right? That's not, life is so short. I'm 39 now and I don't know if I'm having a midlife crisis or what it is, not quite, but I realize life is so much shorter than you ever think, right? And as you get older, time goes faster and faster, and you just realize, like, if you live to 80, 90 years of age, right, that's a long time, it seems like, but it goes by a blink of an eye. Ask a 90-year-old person, hey, do you remember when you were 15? And they're all going to say, yeah, I remember like it was yesterday, And we have the power, again, like you're saying, like that, to take control of our lives and do something different, right? You don't have to punch a clock and go in every day to do something that you really don't enjoy. Man, there's so much more to life, and we all have that power. We literally do have that power to grasp and do something with our life and change it for the better.
It's
So
so
that's
interesting. No, no, no. Like we're not the victim. A lot of people think that, hey, we're the victim of circumstances, or you know what, we have to do this, and we don't really get those choices. Come on, Barry, like you're crazy. Like you've had privilege or whatever. But guess what? Like in, what Tony Robbins says is one of my mentors, one of the people who I really, look up to in so many different ways. He says, in our moments of decision, our destiny is shaped, right? So we get to decide what our
Mm,
future looks like. And in a moment of decision, you can set a vision and obviously work towards that. And perhaps, yes, it may take some period of time to evolve into that. But I think it's really inspiring to know that any any person has the ability to decide where they want to go. And obviously, their success leaves clues, right? Model success. There's so many different reference points. There's so many different people who have done it. Maybe they look exactly like you. Maybe they have the exact same background as you as well. Guess what? That there's references for everything. So I think it's really powerful.
yeah, man, that's so true, so true. Well, so you then decided you stumbled across real estate. What brought you to being a residential agent? And it's funny, like you said, right? Most people, they hear real estate, they think residential real estate. You sell properties or you flip properties, right? That's the
Right.
that's right. That's it's that generalization a lot. But what brought you to residential agency? You think?
So it's so funny when I was like asking myself, all right, do I get my resume ready or do I go out and do something different? And it took me a while to think, all right, let's do something different. And I went out and I started asking people if they would meet with me for lunch or for coffee and, just trying to network. Hey, who do you know who may help me figure out like what's my next move here? And, it was kind of more that just like curious process, and I found out that being a realtor was a way that I could make six figures because I went out there and I took a test. So I met somebody who was a realtor and he said, "Look, you have a perfect personality for this business. Take this test and see what it says." And it comes back and says, "Look, you're a perfect candidate to make six figures." And for me at the time, like six figures is like insane because keep in mind, like I'm coming from middle class background. I was probably making $30,000 a year, maybe $35,000 a year. And so I'm like, okay, that's interesting, right? So I end up, say, all right, well, I'm going to work towards getting my license. And so I get my license. And anyway, the rest is history. I quickly transitioned because of how emotional the residential side of the business was. But it was a great way to get me into the business, start learning how to do transactions, start learning how to build a business by referral, start learning how to farm, how to, prospect for deals, prospect for leads, all that kind of stuff. So it was great training ground from an entrepreneurial and a salesperson perspective. But I've always been kind of a natural salesperson. So it was actually a nice transition. And then I met some other people who, got me into the commercial side of business and started selling investment properties, whether it was retail, office, industrial, land, and then multifamily. And I became known as the apartment guy, and so that was a lot of fun. And I have very fond memories of that because I learned, who the players were. I learned who were doing the deals, who were doing the right deals, who were doing the wrong deals, who was structuring the appropriate deals, the appropriate types of transactions, and so on and so forth. And so that was a great learning experience for me as well. So it's all served me to continue to kind of, in my words, elevate to the next level. And so it's always a continual evolution.
Yeah, for people who don't understand, what's the difference between becoming a residential agent and becoming a commercial agent, both in terms of what you do and in terms of maybe the test as well, what you need to do to qualify to be?
So I think every state is a little bit different. In my state, it was the same. So the licensing is exactly the same. So there's no difference. You're a real estate salesperson, and you can sell, residential or commercial real estate. Now, at the same time, you are considered I don't know. I think you are actually considered a fiduciary, and so you could be considered to be not following your fiduciary responsibility if you're selling something that's outside of your expertise. And so for me, I had to be an apprentice, right? I had to learn the business. And I went out there and got my CCIM designation, which is basically the PhD of commercial real estate, because I wanted to learn this. And I'm like, look, if I'm going to make the full real transition from being a corporate employee to an entrepreneur, I need to be an expert. And so that was a little bit of a process for me. I mean, that took me at least a couple of years to go through that education, to go through, really transforming my understanding from total basic level to understanding financial analysis, market analysis, investment analysis, user decision analysis, and truly being a micro and a macro economist to a certain degree, and advising people on making great decisions and building client relationships for life. And so that was really my process, the evolution. But it's interesting, the barriers of entry for salespeople in real estate are as low as they can get. And it's just a matter of, hey, are you going to sink or are you going to swim? And to me, what I've seen is that if you're ultra committed, if you have a purpose behind what you're doing, there's always a way. There's always a way to overcome those challenges. But, there are a lot of people who get into the business and see, hey, there's going to be some big paydays and all this stuff, and this sounds awesome. And, a lot of times they get shook out. So to me, it was important for me to commit, but also to continue to invest in my own learning, my own growth, my own education, not only from a financial analysis and all the things I just shared, but also from a, hey, how can I manage stress? How can I manage fear? How can I use fear to catapult me forward rather than let it crush me? And so those are some of the things that I became obsessed with, like reading philosophy, reading about, developing businesses, developing systems so that I didn't have to do everything. And, investing in my own coaching. I mean, that's been a huge thing for me along my way as well. So anyway, I'm going off on
No,
tangents
no, this
here,
is
but
awesome.
yeah,
No, this is brilliant. This is absolutely brilliant. Yeah, it just shows you what considerations you need to have if you want to be successful, right? Obviously, you're all in, right? You know what I mean? You're not
right.
dipping your feet in the water. You're all in, right? You're doing all these things with the goal of setting yourself up for success. And I love that, man. It just testament to your character and who you are. How did you land on multifamily? What was it about multifamily? Because obviously you talked about there's different aspects of commercial real estate, right? What was it about multifamily that made you, well, drew you to that?
Yeah, well, it's so funny when I entered into commercial real estate, I was kind of bumping around, right? I was trying to figure out like cuz at first I'm like, all right, so think about my vantage point. I'm looking around in real estate. I'm like, "Oh, houses, that's real estate," right? And then I got a feeling that, "Oh, wait a minute. So there's actually income producing real estate out there." So then I'm looking at that and I'm saying, "Okay, commercial, residential." And then I look in a commercial and I peel back the layer, I peel back the onion a bit and it's like, "Oh, there's all these different asset classes," right? And so I'm thinking of, all right, well, let me enter into this business and let me build a business by referral. Let me build a network. Let me build a reputation, because my background was in marketing and let me establish myself. And as I was bumping around, I started to get referred to certain deals, right? And I, kind of by luck was getting referred to more multifamily deals. And in fact, I actually got referred to a portfolio of multifamily properties of about $30 million. And I was like, this amazing, opportunity. And so I went in there and, a lot of the properties, actually looking back now years and years later, a lot of the properties were extremely challenging. I mean, we're going to talk about deferred maintenance, bad tenants, all of the above. But I went out there and hustled. I was showing properties left and right, and I was, wheeling and dealing. I was doing deals. And so just because of the sheer volume of properties that I had on the market, sort of in that middle market space, I became known as that multifamily guy. And I developed an expertise around it. And then so I said, you know what, for me to be highly successful is for me to really dive into this niche. And so I started investing in multifamily properties from an active capacity, growing my portfolio, smaller mid-sized properties. Then from a passive perspective, now we do syndications in our company. And so continue to grow that. But that's kind of how I got into it.
Wow, interesting. So you started investing pretty early on once you
Yeah,
got
it
into
was
this.
probably 3 years after I really got heavily involved in commercial real estate. And it was about a year after I got my CCIM designation. Because that was the other thing too, is like if I'm going to invest, if I'm going to put money at work, because Robert Kiyosaki told me, hey, the rich people, rich or wealthy people go out and they leverage their time. They buy assets, they don't buy liabilities. And so I'm thinking, wait a minute, I'm selling these assets, right? I'm here. I'm doing this. What am I doing? I'm trading my time for money. And so I started investing after I got that, that hint by one of the godfathers of our business, right? And so yeah, I started investing probably 3 years after I really, really got heavily involved as a broker.
What was your first? Were they multifamily? Your first few investments?
Yeah, the first deal I ever did was an 8 unit building,
Okay.
and it's funny because looking back, it was definitely it was a distressed deal. I thought it was value add. I'm looking at it because I mean I'm selling. It's so much. Let me tell you, it's so much easier to sell these things than it is to buy them, operate them, reposition, do all the things that we have to do. But that was the first deal I ever did was an 8 unit deal. And from there, I went from to a 36 unit deal, and then I went a little bit bigger, and then I started invested passively, and then of course we're doing 100 to 200 unit deals now with our company CF Capital. So that's been the progression and it's been fun. I mean, I learned on the smaller stuff. I made so many mistakes and I know we'll probably talk about that at some point, but I made so many mistakes and I'm glad that I did on a smaller deal like that because if I would have on a 36 or 50 or 70 unit deal, it would have been a lot more painful than it was. on the smaller scale. So I know that I'm sure many people have said that on your show, but I think it's important to note.
Yeah, yeah, yeah. The difference between 100 unit and 10 unit when you're making mistakes is huge, right? Because you're talking
Oh yeah,
probably an extra zero or two at the back end of that mistake. So it's good.
exactly.
It's good to get your training wheels first, right? If you can do that and kind of learn that, and it doesn't mean that you have to start small, but it's not a bad way to start. So that 8 unit,
Yep.
you said you thought it was a value add, but it was actually a distress. So what was, when you got in there, what was the difference to what you thought it was to actually what the reality of the situation?
Yeah, so I bought the deal, and I remember I was doing the due diligence. I'm like, all right, this thing's 100% occupied. This looks pretty good. Of course, as they turn, we'll improve the units. We kind of had a rough, generalization in terms of what the unit, turn costs are going to be and all this stuff. And here's what we'll do on the exterior. But I'll tell you, my team was not set up the way it should be, and you really need help. I mean, this is a team sport. And of course, I think I knew that from a high level, but I mean, I self-managed. I mean, I was doing all these things that I don't recommend now. I mean, there and the other thing, Barry, that I'll say is that I learned so much by being a manager, right? Now I
Mm.
know how to be a great asset manager because I know the ins and outs. I know what's realistic. I know what's not. I know how challenging this business can be. So I think that was important, but my team was not in a great place. Also, I will say my due diligence was not sound because some of these tenants were, it was almost like a loaded rent roll. Have you ever heard of a loaded rent roll?
No.
So the rent roll was, it was full on paper and it was
Mm.
full in the property, but these were not performing tenants, right? So there was actually the crazy story about this one is that about half of the property was not paying rent, which is insane. So I'm thinking, okay, I did my cash flow analysis. I got all this stuff. I'm ready to go. The property cash flow is in this capacity, and we got our expenses and all this stuff. But then, wait a minute, what happens when half of the tenants don't pay rent? And I'm like, wait a minute, this they don't. Robert Kiyosaki didn't talk about this, right? We didn't talk about this in
Yeah.
CCIM,
Yeah.
and so I started to learn that. Wait a minute, we had a tenant base that perhaps was filled up in this property before it was sold, and so, there's certainly ways around, identifying whether or not they're going to be performing, but that was a big challenge. And of course, I had to go through evictions. I had to accelerate my improvement of the property because, some of these units were in some pretty rough shape, right? And, one of the units in particular was like completely down when we got rid of these tenants. And so, our renovation budget, let me just say, was decimated in many different capacities. And so, it was negative cash flow for quite a while. It was higher expenses in terms of improvements of the property, and a lot of learning lessons, a lot of wounds. And the other thing too is the age of the asset. I mean, it was like built in like there was three buildings. The front building was built in like the 1920s. The back two were built in the 60s. So the age of the asset had some particulars that were very challenging. And of course, it just seemed like there was always something, right? But I think I needed all of those experiences. And I'll tell you, in the moment, let me tell you, I did not love it, man. There was honestly sleepless nights. There was nights where I'm like, I don't know how I'm going to pay this. I don't know how I'm going to cover the negative cash flow. And I'm so thankful that it was my money. It was my money that was at stake and not others. So now I know how important it is to do great due diligence, to understand that the unexpected is possible and perhaps at sometimes inevitable. So the question is, how are we going to solve this problem? Because in real estate, it's all about solving problems, right? And so yeah, it was a very, very challenging. Time healed all the wounds, and it ended up actually being a very successful exit. And so very happy about that. But it was challenging. Couple. It was probably about a 2-year period where we were transitioning that property and repositioning it from completely distressed to stabilized, and in fact, in a pretty good condition. So it was challenging.
Yeah. Sounds like it was a challenge. Was that a deal that you found yourself through, or was it through someone else?
It was a deal that I found myself, actually. Yeah, direct.
Nice, nice. So then you did a 36 unit, I think you said. Was
That's
that,
right. Yeah,
wow? So that's quite a big step, right? Going from 8 units to 36. What did you have
it
a
was.
team? Were you doing that by yourself? Did you have partners? How did you scale from 8 units to 36?
Yeah, I had one partner on that deal, and in fact, my partner was a contractor, and so he specialized in doing the physical rehab. And so this one we knew was distressed, right? So this one was a little bit different. So we budgeted for a bit of a distressed opportunity. It was going to get worse before it got better, and this was actually an estate sale. And so we bought the property from an estate, and the gentleman had passed away. He'd owned the property for 30 plus years. And we went in there and we actually had 10 down units. So we went in there and rehabbed those down units, filled those up. And then the rest of the property was 30% under market. And so it took us a period of time to absorb those rents and kind of turn those over. But we were properly budgeted. Of course, there were still things that we didn't do properly, right? There was things that we should have done quicker. A lot of the things that we did, we addressed a lot of the exterior and, painted the building, put a new roof on. There was actually 3 buildings to that property. I still own that property today, by the way. It's a great property, but we put on all new windows and all this stuff. And, what we learned about a year and a half later is that, hey, we should have done the parking lot early too, because if we can really show everybody that, hey, we mean business here and we're really, here to spruce things up, I think it would have continued to communicate with all the tenants. It took us longer than we expected to, get everybody back up to market. But, there's always lessons to learn, but we did it better, right? Each and every time you do it better. And in fact, I think we did it so much better, and I did it so much better because of all the painful lessons that I had in the first one. So it was fun.
Yeah, yeah. Sometimes you have to learn the hard lessons to really learn them, right? They don't, you can hear someone say, and yeah, you can learn like that, but sometimes, us as entrepreneurs, we can be a little bit stubborn, and it's just takes those hard lessons sometimes to
I know.
to really teach us. Yeah, that's a cool, right? That you were able to go in then and do a similar asset, that because a distressed property isn't an easy asset to turn around, right? Like, and for people who don't fully know, maybe understand what do you mean by distressed as opposed to maybe a value add or
Yeah.
a turnkey property?
Well, if you really want to get technical on it, any Fannie or Freddie lender will tell you anything less than 90% occupied is distressed. But I'll take it a step further and just say, if it's the occupancy plus the nature of the asset, whether it's, collections, whether it's physical, condition of the asset, or otherwise. But if you really want to look at it from a definition perspective, it's about the occupancy. So if you're less than 90% occupied, you're considered distress in the eyes of, Fannie Mae, Freddie Mac, and, many other lenders out there. So a stabilized asset is one that shows, consistent occupancy over 90%. And so, I think it's interesting to consider. I mean, there's certainly people out there who say, hey, I'm a value add investor. And I think it would be interesting to note, are you a value add investor? Or are you more of a distressed repositioning investor? Because it is quite a bit different. It can be more challenging. There can also be more upside, right? There's certainly more risk in a distressed asset. And so, it's, can you be a grave dancer like Steve or Sam Zell? What am I? Steve Zell. Sam Zell, he considers himself to be a grave dancer because he buys distressed assets, right? Distressed, towers and all these different things. So anyway, that's what a distressed asset is.
Yeah, and is that your business model now going forward into syndications? You guys look for more distressed properties?
We are opportunistic, actually,
Okay.
especially within this marketplace. It's a very, very competitive marketplace. And, we'll buy turnkey Class A deals. We will buy value add B and C deals. We'll buy distressed assets. It just has to match up with the risk reward ratio at the end of the day. We're also looking at new construction just in terms of how tight the marketplace is, how compressed cap rates are. So, yeah, I would just say that we're opportunistic and we're open, we're flexible within a certain degree, right? We're not going to be spreading ourselves. We're not going to buy every single property across the nation, right? But at the end of the day, we're opportunistic in our markets that we're focused on.
Yeah, yeah. So then after the 36 unit, is that when you jumped to syndications? Was there a few more deals
That's
before you
right.
got it?
Yeah, that's when I jumped to syndication. I started investing passively, and I wanted to learn. Because here's what I learned: the smaller deal, I learned, I licked my wounds. I learned all these lessons that I just described. The bigger deal, I implemented them in a better capacity, and then I said, you know what? What I've learned on this bigger deal, quote unquote, the 36 units, is that scale is the name of the game. Right. And so then I said, well, wait a minute. If scale is the name of the game, 36 is not getting me there yet, but it's doing better than 8. And so I looked around and I said, well, what's the best way for me to scale further? Of course, I was selling these larger properties, but I was generating fees from that. And I said, well, let me just start investing in some of these larger syndications. And so I think the first syndication that I invested in was like 192 units. And I was able to kind of look over the shoulders of my friends who were the syndicators on this deal. And so I was not only able to receive some of the cash flow, but look over the shoulder and, how do you do this? How are you doing this? And so as I continue to educate myself, not only from that capacity, but also, surrounding myself with securities attorneys and people that can, help me elevate my business, that was really the next step for me. So I invested several times in other syndications before we started doing that.
Yeah, I think that's a great way to learn for a lot of people, right? You invest passively in a deal, you get to see so much more about
Yeah.
what goes on. And for someone who's looking maybe to get started and thinking, okay, let me invest in the passive deals, what are some things that they should consider when they're looking for a good deal sponsor to invest with?
You definitely want to look at, you want to get to know them, first of all. I think relationships are important. And, do you trust this person at the end of the day? Are they trustworthy? Do they have a history of doing the right thing? But then also understanding what's their background, what's their vantage point and what's their expertise and what's their team look like? Because if you're going to do big deals, you got to have a great team, you got to have a good execution strategy. And so knowing, first of all, that they're trustworthy, that they have sufficient experience in the business, and that they surround themselves with other people who bring, competency and excellence is really important. So, I always tell people whenever they ask me, hey, how am I going to get started in this business? How am I going to really ramp up, whether I'm active, passive, or perhaps a combination of both? It's about educating yourself, but then taking action, right? Education plus action. And so, to me, that's what it's all about. But it is about connecting and meeting a lot of people, networking, and asking for referrals, references, so on and so forth. But those would be a few suggestions I would have.
Yeah, that's great. And then you went into doing after investing passively, which was a smart move to kind of learn the business a little bit more and make some connections as well, right? Don't look past that point. If you're investing money in someone's deal, you got to create a relationship with that team and with
Absolutely.
that group for sure. How then did you get comfortable with taking down your first deal? Because I'm guessing your first deal was probably 100 units plus.
Yeah. And so, how did we get comfortable? Is that what you said?
Yeah. Because it's a
I
big
mean,
step, right? To take on other people's money, to take on this large project, this
yeah.
large dollar value. Um,
Yeah. Yeah, for us it's just about, really establishing a relationship with property management, right? Property management is the most important, component to execution in this business. And so for us, we operate in several different markets, and so we want to align ourselves with the greatest third-party property managers that we can. And so for us, that was really the first step. And so, my business partner and myself were really focused on not only the market that we live in, but markets surrounding us by, 3.5 hour radius. And so for us, really the first step was not only establishing deal flow presence and relationships with brokers in those markets, but it's also understanding, hey, who are the property management companies that have the best expertise, the best reputation in the marketplace, and really establishing a relationship with them, because they're looking to grow their business as well. And so for us, that was the first step, because we don't intend on bringing property management in house. We might at some point. I mean, never say never. But for us, if we can lean on great property managers who can look over our shoulder, who can, give us the blessing of our, projections, and then also execute at the end of the day and help us be great fiduciaries, that was our best first step. So that still is really important to us. It's, asset management is highly, highly important for us to be successful as operators. But at the end of the day, what happens at the property is really where the rubber meets the road.
yeah, and that's such a great point. And people, I'm sure, hear it all the time, but it's the importance of team, right? Like you could be inexperienced yourself, but through the power of your team and the people that are on your team, you can be really experienced, right? If you have an experienced property management, if you have an experienced contractor, right? If you have experienced lenders, right? If you have experienced brokers, right? You can leverage all these people's experience to really get into good deals, to be successful, to narrow that learning curve, right? It does, like, you mentioned that first deal that you had, like, even though you had
Yeah.
team members, if you had a bigger team and a stronger team, I'm sure it would have helped a lot. So you can really leverage that. And that's such a great point that,
Oh, yeah.
is always important to consider.
Absolutely. And asking questions and not acting like you know everything, right? Because it's so interesting. The people who I meet in this business, the most successful people are the ones who are the most humble,
Mm.
and they're willing to recognize that they don't know everything. And in the beginning of my journey, I was almost nervous to show anyone that I didn't know everything and that I didn't have this type of experience. So I didn't want to say anything. I didn't want to ask that question because I didn't want to reveal that I didn't know something. But, I'll tell you what, questions, like we were talking about questions earlier in this conversation, some more higher level, powerful questions. but asking questions and being willing to show that, hey, you don't know everything, I think is really powerful. People are willing to, give you a helping hand. So we continue to ask great questions and, be willing to, show that we don't have every answer as well.
Yeah. Who was, we spoke about team then. Who was part of your team for that first one? Did you have partners? Did you just have outside third party team members? Who was part of the team?
Yeah, so we work with strategic partners with CF Capital, and so we joint venture our deals as well. And so that the first opportunity for us was a joint venture with a more experienced partner as well. And that was another thing that it took us a little bit of a time to understand that to do these deals, even if we had a significant amount of experience and a track record in the business in different capacities, we needed to lean on others who already had that type of reputation that we wanted to step into as well. And so we joint ventured with other partners, and that was really another way for us to leapfrog into that space as well.
Yeah, interesting. So, what does your portfolio consist of at this point? Because I'm guessing it's probably a sizable one by the sounds of things.
It's not, no, it's not
Uh,
too huge. I mean, honestly, I've been in the business, since 2013 in the capacity that we've described until now. And, I'll tell you what, last year we didn't buy anything. And,
wow.
it's really interesting about it because we looked at 120 deals. And when I say looked at 120 deals, I mean, we deep dove into 120. We offered on about 25% of those deals. And ultimately, they were bid up to a point where we felt the risk reward ratio was out of balance. And it's interesting because it's in the middle of a pandemic, as an example, right? And you look at the environment and you say, wow, the risk is continuing to rise, but the prices are also continuing to rise. Cap rates are continuing to compress. And so, we're really patient. I mean, our goal over the next 5 years is to buy 10,000 more units, but we want to buy good deals. You know what I mean? And so, where we're at right now, I mean, we own everything that we own is garden style apartments in, suburban, markets. So that's what we're after. But again, we're opportunistic. I mean, we're looking at low income housing tax credit, new development deals as well, because there's a huge need in the marketplace, and there's an ability for us to fill a need and also to develop at a certain cap rate that's really not available in terms of the acquisition market. So there's a lot of things that we're looking at, and I think that there is no limits to what we can create and the value that we can create and the opportunities that we can share with other people. But that's where we are. But we're also patient. I mean, we have big dreams, but we're patient to get there because it will all happen in due time.
Yeah, yeah. So, is that the biggest change that's happened since the pandemic? You guys are just really evaluating stuff a lot more stringently. Not that you weren't underwriting conservative or anything like that before, but obviously you have that eye towards that risk of what could happen, right? The economy is, not where it was pre-pandemic, that's for sure, right? But then
Right.
again, prices keep going up, and there's more competition, I think, than ever. Almost, it seems like.
Yeah.
So, was that a case of you guys having to reevaluate what's going on and where things might be going?
Yeah, I mean, we're always reevaluating. We're always looking at what's going on in the macro level and the micro level, and really understand like what are all the dynamics here. Let's look at this from a big picture. Let's get into the weeds and let's look back and make some decisions here. So I don't think we really changed our approach. The market was definitely weird. It took us a little bit of time to understand, where's this going to shake out. And of course, deal flow was pretty quiet for about 3 months of last year, right during the beginning stages of the pandemic. And then of course, as things started to trickle out, we're thinking, all right, are we getting the COVID premium or are we getting the COVID discount? Because at first we thought it was a COVID discount, right?
Yeah.
And then it became the COVID premium. So I think we look at every deal as a case by case basis. Every deal is unique. And I'm actually really optimistic because I think 2021, we've already seen a higher level of deal flow in 1 month. And so I would expect that to turn around. I think it's interesting because you think about like all the people in retail and office and other asset classes that are saying, or hotels as an example, they're saying, well, wait a minute, where else should our capital go? And they're looking at one or two places. They're looking at multifamily and they're looking at industrial.
Hmm.
And so, of course, with the compression of that amount of capital going into two asset classes, supply and demand 101, right? It's economics 101. So that's been really interesting, but I think more deals, in general across the marketplace will benefit, values and will hopefully balance that out. But we're optimistic to more and better deal flow this year.
Yeah, yeah. And do you have Do you have your crystal ball there with you right now? As I'm just joking, but obviously as you pay attention to the economics of everything, and obviously you're a very smart guy, do you have a feel about where things are going? Again, it's just like a feel. I'm not asking for a
Yeah.
prediction or anything like that, but just any insight that you might have.
Yeah, I know. It's so funny. We've got a podcast community, Elevate podcast community Facebook page, and I put out a poll yesterday, and it said, which one of these, and it's just a kind of a fun poll. It's like, which one of these would you like to have if you had the option? One of them was like unlimited time travel. Another one was a crystal ball to tell you whenever the market is going to change. So I'm glad that you asked me this. And there's a couple other examples. And I actually chose a crystal ball because if you can identify where it's going next, I mean, you can create anything, right? You can capture opportunities, which are amazing. So I'll say that, but also I'll say that, most economists have no idea where it's going either,
Yeah,
right? So we have
yeah,
no idea. But I don't know. I mean, I look across the landscape and I see a higher amount of, liquidity in the marketplace from a capital perspective. I would imagine there's going to be some inflation at some point in time. So we'll look at the strength of the dollar. And we'll look at, consumption patterns, right? At the end of the day, the American economy is all about consumption. It's all about consumer behavior. And so, where is that going? One of the things that we love about multifamily is that, housing is a need. This is not a luxury. And so, of course, the consumption patterns will adapt and adjust over time. And, you think about where, are people going to continue to live in multifamily housing, or are they going to be more trending towards single family housing? If you look at over the pandemic, a lot of, transition has been towards single family housing. And so that's really interesting. But then you also have, continued migration in certain parts of the country, the Sun Belt, the Mountain West, and those kind of things. So that's really interesting. So I don't know. I mean, I think consumer debt is another thing to take a look at, but there's definitely a lot of smarter people than me to really comment on this. But I think there's a lot of things that make me, concerned about the economy. But at the same time, I mean, we're in an unprecedented type of an economic circumstance. I mean, we've never seen, we just had what 2 trillion in additional debt, sort of, or not debt, but new liquidity pumped into the marketplace. We might have that again this year or more. And so how does that impact the markets? I mean, I look at what's happening on Wall Street. I look at, the Reddit sort of crowd, pumping up stocks and all these things and the volatility. So there's people that are way smarter than me that say, hey, we might be at the top of the cycle in different capacities. And each asset class is in a different part of that cycle. So, I think the question is, hey, what's going on in the economy? And it's very dynamic. It's very multifaceted. So, but it is also very fascinating. I'll tell you one other thing. I read a book called The Fourth Turning. Have you ever heard of the book called The Fourth Turning?
no,
So it's really, really interesting. And he talks about basically, the patterns of history, right, over time. And there's, you think about seasons, right? You have spring, you have summer, you have fall, you have winter, right? And so which season are we in? And perhaps we're turning into the fourth turning, which in his description is kind of like winter, right? There's a lot of challenging and volatile things that may happen, but obviously challenges and volatility create opportunity as well. So I think there's opportunity in every market, but it's interesting, and I'm definitely a student of the market, that I can say that.
yeah, and the problem with predictions, right? There's so many economists that try and predict it, right? It's so hard to predict stuff, and stuff it moves so differently to how you think, right? And there's just so many stupid examples of that, right? For example, when this first hit, right, I was looking for a car. I was like, okay, if I can hold out a few more months, car prices are going to drop because the economy is dropping. Nobody's buying cars, right? Well, the
Right.
opposite happened. Car prices skyrocketed, including used cars, because there was no manufacturing. They weren't importing the same, right? And you had all this demand and very little supply, similar to what's happening in the real estate. And car prices shot up, and I was like, oh man, I should have bought 3 or 4 months ago. But it's just,
So
you never
interesting.
would have seen that. Same with people that work in construction. You'd have thought, oh, these people are going in for a tough time now. But people are home all the time now, so they're like, I don't. My kitchen is not that nice. I want to improve my kitchen or improve my
Right.
bathroom. So these people are, people that work in the construction field are so busy right now. You would have thought the complete opposite. So I think that's the problem with prediction. Like, even if it makes logical sense for something to happen, doesn't mean that it's going to happen. There's going to be another logical sense it'll be even more logical. That'll come and wipe that away, and it'll just make it different. So it's just, I'm always so interested in that, because people try to make predictions all the time, and there's nothing wrong with that. You've got to try and see what otherwise you're going blind into the future. But it's always interesting to me.
It's so true. And logic is like, almost, we got to throw logic out at this point, right? You think with all the bankruptcies that we were facing, like in the spring and late spring of last year, it's like, man, we're going to have a huge problem with unemployment. And we certainly did. But then, you had, look at it, it was a V-shaped recovery in employment. And so obviously employment is very important for multifamily real estate. So it's just going to be interesting to see the health of businesses, the job market health, and where population growth goes, where immigration goes, where migration goes. I think those are all things that, if you're investing in multifamily, or, a real estate investor in general, you just need to know those patterns. A great book I also recommend is called Big Shifts Ahead, by John Burns and Chris Porter. So that's another one. It was pre-pandemic, but it's still a lot of that stuff. I actually had Chris Porter on my podcast, and he's like, look, this is accelerating these trends. It's just making it happen faster. So I would recommend reading that book.
Big shifts ahead. Okay, cool. Good book recommendation. Well, man, hey, thank you for making the time to be here today. This is really interesting. Like, it was so cool what you've been able to do, and just sharing so much good insight today. I really appreciate it. But as this show is called Wrestling with Real Estate, I like to incorporate some wrestling-related real estate questions. And the first one is, what would your wrestling name be if you picked one for yourself, you think?
Okay, I've been thinking about this like the whole time we've been talking. Like, what am I going to say on this one? So I'm like, all right, I'm thinking of wrestling, and of course, like, look, The Rock is bald, right? So that's good, right?
Yeah.
Stone Cold Steve Austin's bald.
Yeah.
I mean, bald men are amazing. Like, think about this. We got, who else do we have? We got Michael Jordan. We got Jeff Bezos. I'm just saying we got a few, but I don't know. I mean, my wrestler name, let's just. The Rhino. Let's go with that. The Rhino.
Okay,
That's
I like that. I like that. Right, charging head first into everything. I like that.
That's right. That's it.
Every wrestler has a special move. What is your special move in real estate?
Ooh, my special move. I mean, I would say that I'm pretty good, maybe really good or great at developing connections with other people. And at the end of the day, real estate is a people business, right? So I think you have to be a little bit of a ninja, right? Because everybody's different. Everybody has a different type of personality. Everybody has a different type of perspective. Everybody has a different background. And so I think I have a good opportunity, or a good ability to really see that perspective from other people's shoes and really connect with them on that basis, and be a bit of a chameleon when I need to. So for me, that's kind of my special move. But then I'll take it a step further, because you can utilize that to create mutually beneficial scenarios. And negotiation is one of the most valuable, roles or functions that you can have in real estate. And so for me, that's kind of like my secret move.
Awesome. What's been the biggest body slam you've taken?
It's probably got to be a lot of the stuff we talked about on that first deal. Lots of challenges, negative cash flow, much higher budget than I had expected. It was a body slam for a couple years, and then finally I slammed that thing back on the mat. What do you think about that?
That's awesome. You got to reverse it, right? You got to turn it back around. Yeah,
that's
awesome.
Right.
So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Yeah, there's a lot of times where I've had to overcome sort of that inner voice, right? The voice that says, "Hey, if you do this, you might fail. You might, X, Y, and Z." And so, I've had people that have encouraged me along the way to, go the extra mile and make that call, even if you think that you're not qualified for that. And there was actually one particular deal that I was doing as a broker, back in the day, that, was actually stretching, because I was doing kind of mid-sized multifamily, and, I had the opportunity of perhaps doing a larger deal. I had a buyer who was ready to take the leap, and, it was my first 100-unit deal. And I just felt like, well, maybe I just don't have the experience to really do this. And, maybe he needs to work with somebody else. But, it's like I was on the top of the rope, and I decided to make the call, and ultimately we closed the deal. And so, was it easy, and was it just as simple as that? No, but I think it just came from that decision in that moment to, believe in myself and take a little bit of a leap of faith. So I love the question.
Yeah, why not, right?
Why not
me?
That's
why
it.
not? Why not me? Going back to
why
that.
not me, man?
Yeah,
That's
yeah.
it.
I love that. Well, cool, man. Hey, thank you so much, man. This has been really interesting. I've loved that talk. It's been really, really interesting. But for anyone who's listening today who might want to do something for you, how can people help you? If anyone wants to help you at all, what can they do for you?
Oh man, I love that. I love that question because I think it's always important to remind ourselves that we should always be asking other people how we can help them and not how they can help us and all that. So I appreciate that. I always enjoy connecting and learning with other people. So people can visit my website, tylerchester.com, or of course they can learn more about Elevate Podcasts if they want to listen to Elevate. It's just elevatepod.com. And of course, you can find us on every podcast platform as well. So those are a couple ways, to help me, but, just support us, send us the good vibes, right? Send me the good vibes, and I always appreciate that. So those are just a couple ways.
Yeah, and I'll go one step further. If you guys really want to, one simple way you guys can help him out is go give him a 5-star rating and write him a great review on that podcast. It's a great podcast. So
Do the
if you
same
guys,
for Barry, my man.
absolutely, absolutely. So again, if people want to find out more about you, reach out to you, any of that good stuff, and again, plug everything that you have, how can they do so and let everyone know about everything you've got going on?
Absolutely. So tylerchester.com is one place, elevatepod.com is another, and then cfcapllc.com is another. So those are my three, business websites. Of course, Elevate, we're doing a coaching academy as well. Elevate High Performance Coaching Academy. It's for people who want to elevate their game. They want to make more money. They want to have more freedom, and they really want to play at the highest level. And so elevatecoachingacademy.com is another place. So I'm giving you a ton there, but of course I'm all over social media. In fact, that's where you and I met, Barry. And so, please connect with me there, whether it's LinkedIn, Facebook, Instagram, Twitter, what have you. I need to venture in a Clubhouse. I'll do that eventually, but yeah, I'm everywhere, man.
Cool, cool. I'll put the links onto all that stuff in the show notes and the description below. I'm scared to join. I haven't joined Clubhouse myself either. I'm worried there's going to be a rabbit hole that I don't escape from because everyone talks so good about it. And it's 24 hours a day, and it's like all these groups and stuff you can join. And I'm like, I waste too much time already on stuff. So it's like,
no,
I'm
I
scared,
agree.
scared,
It's like shiny object syndrome.
Yeah. Well, hey man, thank you so much for making the time. Genuinely, I really mean that, and I really appreciate you doing that and sharing everything you've done. It's been awesome, man. So thank you so much.
My pleasure, Barry. Thank you for having me, my friend.
Awesome.